So the little ecosystem we have up here, we have my favorite commodity research firm. We've got the leading maritime research firm. We've got a leading lawyer to help us understand sanctions. And we've got a shipping company to help us understand the real world. So I think we've got this covered from all angles.
Good morning, everyone. I'm George Macheras. I'm a partner at Watson, Farley & Williams, specializing in maritime. I'm also the firm's global maritime sector head, which happens to be our largest sector and also the largest dedicated maritime practice, legal maritime practice worldwide.
Good morning, everyone. I'm Oddmund Føre from Rystad Energy, Oslo headquarters, partner, head of offshore and shipping, and we're excited to be back here again.
Good morning. My name is William Fairclough. I'm the managing director of Kwong Maritime Transport, and we are a Hong Kong headquartered ship owner present in the tanker, bulk carrier, and gas markets.
Good morning, everyone. My name is Tim Power. I'm Managing Director of Drewry. We are a specialist maritime sector research and consulting company. We have offices in London, in Delhi, in Singapore, and in Shanghai.
So, Charles, I'll start with you, and we'll start with the notion of sanctions. Help us understand if sanctions work, who sanctions work for.
A loaded question to start, but I think there's two elements to this, or multiple elements, but for our purpose, I think there's two elements to this. The first one is whether the political agenda behind sanctions works, which I suspect is not the subject of this panel. The second one is whether the legal agenda or the legal intent behind sanctions does work. And I think to that extent, if the purpose of sanctions is to do two things. A, to tell you what you're supposed to do, and secondly, what you should be prevented from doing, then I think to the extent that they are enforceable, to the extent that they are enforced, it does work, because I think a willing owner, a willing charterer, somebody who wants somebody who's looking to be compliant with international sanctions, US, UK, EU, and so on and so forth, will be deterred from doing things which are either obviously illegal or there's a good chance that they might be illegal. So I think to that extent it does work.
So we take the Russian sanctions as an example. Very different than the situation with Iran. So explain very, very quickly the difference between how Russia's being treated versus how Iran was being treated.
Yeah, that's a really good example, because from a lawyer's perspective, Iran is easy. When a client comes and asks you, can I do this involving Iran? 99% of the time, the answer is going to be no. It's very black and white. With Russia, the situation is obviously much grayer. There will be legitimate circumstances and legitimate positions whereupon you can actually transact with Russia. Maybe less so these days, but still, it is conceivable that you can do legitimate business with Russia. So there, the question is how the complexity affects the trade, not just from a legal and a regulatory perspective, but also from a commercial perspective and the risk appetite of a particular participant.
And in terms of the Russian sanctions, who's been harmed the most, who has benefited the most?
In terms of who's been harmed the most, I would certainly say that with the latest sway of sanctions, mainly from the US, and the fact that now 90% of the oil, especially when it comes to the oil trade, the fact that the 90% of the oil suppliers in Russia have now been comprehensively sanctioned. So in an absolute manner by OFAC, it is a position that you cannot directly or indirectly have dealings with people like Rosneft or Gazprom Neft and so on and so forth. So there, to be seen, but if there's ever going to be, put another way, if there's ever going to be a chance that you're going to harm the Russian energy economy with that, this is the way, this is the cometh of the man, cometh of the hour.
William, let's,
No, go to
William, as a shipping company, talk about how you've had to adjust to the sanctions and what the real world is like.
Thanks, Jim. I suppose what's the value add of me sitting here on this panel, I'm not a geopolitical expert in any sense, but we are, to some extent, where the rubber hits the road for the trade. So we have to sort of allocate capital, and we have to adjust our trading patterns and our strategy accordingly. So in terms of do sanctions work, and looking at it from a legal perspective, in a sense, we don't really care if they work in terms of their original objective, but what's the impact going to be on the market? And the impact has been tremendous, huge, enormous. You can't overstate the impact of the Russian sanctions on the tanker market, simply because it's led to, and it was touched upon in those slides we just heard from Steve, huge inefficiency relative to peak efficiency, if you want to call it that, some years ago in terms of trade patterns and trade flow. So you had huge volumes of oil moving relatively short distance from Russia into Northern Europe, and that disappeared overnight and has been replaced with much more ton-mile hungry trade routes. And so the inefficiency has disappeared, but that's had a very positive impact on earnings, because you've then got a shrinking number of vessels, because the vessels that choose to then go and trade in the grey fleet or the shadow fleet are taken out of the compliant fleet, and the compliant trades become much longer. So you saw a step change in earnings on tankers, and that remains. So the question now for us is, when does that stop? So then geopolitics becomes very important for us to try and second guess that future event.
And just a very quick follow-up as it relates to the dark fleet or the shadow fleet, whatever you want to call it. It obviously has had a big impact on asset values. Does it continue to have a big impact on asset values?
Yes, because the earnings are so strong. So the earnings are a very direct correlation with, with asset values. The statistic, which I think is important at the moment, is that if you look at vessels over 20 years old in the tanker market, in the sort of crude, mid-size and large tanker market, over 90% of vessels over 20 years old are trading in the shadow market. So, that's a big block of ships, which is almost exactly matched by the number of ships in the new building order book. But the destiny of those vessels has a huge impact on the cost of freight for everybody, and direct impact on our sort of trading future. So yes, it has an enormous impact, and that's where the sort of legal element becomes extremely important.
Tim.
Yeah, I just wanted to come back to this point about objectives. So if the objective of sanctions is not clear, or it's grey, then making them work is very difficult. And if you look at Russian crude production, as I'm sure you're all familiar with, it's hardly been affected at all. So in that sense, you would say, because the aims of the sanctions were, in a sense, contradictory. On the one hand, you wanted to keep global oil trade going, and Russia was the largest exporter, so you couldn't stop it without causing all these troubles. Then actually the whole concept was flawed, I would say.
So Tim, your firm put out what I thought was Oddmund, your firm put out what I thought was a depressing piece of research last week on the Russian refinery production, which had shrunk to 5.3 million barrels versus its peak a year or so ago of 5.6 million barrels. So after all those drone attacks and all these sanctions, that's not much of a drop. Take us through.
That's a good point, Jim, remarkable, baffling, if you will. And if I may bridge also from Tim's point first, how if our sanctions successful, we have been hurting the economy. That can be a goal with reduced revenues, increased cost. But I think there's an important observation here is that volumes come through, because it's a high demand. People need, food on the table. We cannot freeze. We need to heat up where we live. There's a strong demand, and we will find a way to get these volumes out. And so has the Russians. And when we saw a reduction in refinery runs at the end of last year, we saw an increase in crude exports seaborne at the same time, higher than 2024. So yes, they have been remarkably resilient, drawn the tax price, caps, political pressure, but they will find a way. So I think that's kind of an observation we need to bring forward, and then how will we deal with that? Because there is also a lack of enforcing we need to address. And also those that benefit from this that are not compliant with this regime, the buyers of this discounted oil.
But India's compliant. They're staying within the price cap.
Well, actually, it's interesting because India has, from this, or the major refiners in India have had said from the outset, from the beginning of the oil price cap regulation coming into place, saying that they're going to be compliant with it, and actually, it's a good example. India is a good example because if you actually touch on what Tim said about, if the sanctions objective is not clear, then the whole thing falls apart, which I agree with. I would actually see it in a slightly different way, without actually disagreeing with you, though, because when the sanctions first came into place with Russia in 2022, I think the idea, the vision, was to some extent quite clear, which is that the powers to be wanted to make Russia the new pariah. They wanted to make Russia the new Iran. And then, of course, as Oddmund said, you realize, and as you said, Tim, people then realize that actually they're the biggest energy producer in the world. So how on earth are you going to do that? And then you start reverse engineer the framework. And when that happens, that's when the grey comes into place. And, it's got positive effects, but it also has negative effects, like the dark fleet that William touched on.
Let's jump to the Suez Canal, the Red Sea. That's obviously had massive implications for the shipping space. It's had massive implication for ton miles. Tim, why don't we start with you on that situation?
Yeah. Let's talk about the container shipping industry first. In a way, it has particular characteristics and particular challenges. If you are running a container shipping service, you operate, as I'm sure you know, on fixed day, weekly services. If you change the routing of your ships, all of that gets shot to pieces. And the great risk is that you then have, for example, all the ships arriving at the same time in North European ports and complete chaos. So this is the reason why the container shipping lines, apart from the physical risk to ships, why they are so cautious about going back. Because if you go back through Suez, you start putting services back through Suez, and then you have to unwind it again, you're really causing your customers a lot of difficulties. Our discussions with the cargo owners who are using container shipping services indicates they are not pushing the lines to go back. They accept the longer time because reliability for them is more important. So we are still, there have been tentative returns. Maersk have tried a few, CMA-CGM have tried a few, but the most recent announcement by the Ocean Alliance, which is CMA-CGM, Evergreen, COSCO, OOCL, they are all saying that with the new schedules from the 1st of April, they're still going around the Cape of Good Hope. So as far as the container shipping industry is concerned, nobody has yet broken ranks in a systematic way because the fear of schedule chaos plus the physical risk to the ships is overwhelming.
Talk a little bit about your forecasting around the container segment, and obviously there's a tremendous amount of supply that's come out over the last 3 years in container ships, and that supply isn't slowing down very much. And what would it mean if peace broke out and all of a sudden we could go back through the Suez Canal?
Sure, and of course this is another motivator for the container shipping industry collectively. The order book is roughly 30% of the global fleet. I must say that and we've been expecting significant overcapacity for some time. But another theme we may address a bit later is container shipping volume has actually grown much more strongly than we had expected in 2025. So the industry has not been as badly affected as we might have expected. But having said that, the main reason that container shipping lines made money in 2024 and indeed in 25 is the Red Sea crisis, because that has absorbed, it's 30% further to go round the Cape of Good Hope, takes you 30% longer, and roughly 30% of global container trade goes through the Suez Canal in normal circumstances. So in very simple terms, it's about 10% of global container ship capacity. If that were to come back suddenly and reliably, then you would start to see freight rates eroding much faster.
And just to point out, the last time I was at a Marine Money event was June in New York, and container rates were doing extremely well at the time. Obviously, they've come off quite a bit. Your forecast? It's a tough one, I know.
No, we think that the laws of gravity will apply, and rates will continue to erode. I mean, they're eroding. They're not eroding steadily. They keep, we've got pre-Chinese New Year. There's a bit of a spike, but the general trajectory is down.
There's a big new building order on container ships. It seems so.
Yeah, it was at the COSCO LNG. I mean, it's endless. And of course, one other thing, which is a market thing, not a geopolitical thing, is that MSC is buying everything it can get its hands on. Because their philosophy is we must be big enough to compete with the alliances as an independent operator. And that's why they're buying all the ships, and that's why they're trying to buy the Hutchison container terminal portfolio as well.
William, you're not in containers, but you're in gas and you're in tankers and you're in dry, and obviously those segments are affected by the Suez Canal. Take us through your reality.
Yeah, it's a big question of whether the tramp trades, tankers and bulk in particular, will lead that trade route back through the Suez, or it would be driven by the liner services. The question a little bit is, can you put the toothpaste back in the tube? The Houthis now have this ability to hold the world to ransom, which is probably quite tempting, every time there's a sort of political situation. So if you're then trying to plan 1 year ahead, which is the minimum that they'll be looking at from a liner perspective, they need to see a little bit more, as you've outlined. On the tramp trades, it's a bit more immediate. You're going to be asked to go in, next week, next month, and you've seen the traders on the oil side all pushing for that now. There's definitely some arbs open on the tradability of the product, and so they want ships that can go through. And owners generally, as we stand, are quite reluctant still, even on the tramp side. But you're getting the odd sort of bolter, if you like. You're saying, yeah, okay, we'll do that. There's a lot of Chinese vessels that have been going through consistently because, they haven't felt that, they've been part of the sort of threatened fleet. And we're starting to see more pressure. But the oil companies, interestingly, who are obviously a lot more risk averse, they're not pushing for that. So I don't know if we name names, but the Totals, the Exxons, the Chevrons, the Shells, BPs. If I name them all, then they won't get so upset. But they're not really as pushy as the traders, and so that's the sign to me. It's the canary in the coal mine that that will come. The laws of gravity will eventually take effect, but it hasn't happened yet.
Let's switch to coal. And 13 months ago, Oddmund, I was on a Ryland call, and they called coal peak of the market. The trade's going to die. And so take us through what's going on in coal.
Yeah, probably someone that can answer that a bit more in detail than I can. No, we've seen, cost prevails, and the reality, tends to come back and bite us. We have had a couple of years now with a green shift, but maybe a bit of a hype that now has, regressed and returned to a bit more realistic view in the industry. We've seen in some areas of the world, Asia, coal is important, We've seen also how, when you try to slow speed LNG vessels through Southeast Asia to save emissions, you need to switch from coal to gas or gas to coal to actually get the energy that you need. So again, you know, it's and you also see some politics coming out of the US in the past months, where we have also supported that branch. So it's not completely dead. We are seeing volumes coming out, meeting the demand that we see there, but it will fade away gradually. Yeah.
Tim.
So can I just say something
Absolutely.
on coal? I did a panel in May in Geneva and it was on a coal panel actually. And at that point, there were a few people saying, right, we've seen peak coal probably last year. And then what happened in the second half of the year, to me, says everything about the importance of, geopolitical importance of coal, which is why it's quite relevant for this panel, is you just look at China and they have abundant coal. And the LNG imports that are going into China are generally heating and chemical use. It's not a big sort of power thing because why would they? From a geopolitical perspective, national security, why would you then put some dependence on another foreign-controlled commodity? And so coal is, you know, essentially important to China. And it's very difficult to predict government policy on coal, Chinese government policy on coal, but it has a tremendous impact ultimately on the dry bulk market. And we saw it in the second half of this year, because you then saw that the domestic coal price was extremely low and that there was no money being made. And under the sort of guise of safety and environmental concerns, they actually restricted the domestic coal price and the domestic coal activity, which spurred a lot of imports, and we saw tremendous improvement in dry bulk rates in the second half of the year. That was largely coal driven and that was largely policy driven, and that's not going away. And coal is, to China, their safety blanket in terms of the national security energy source, and the volumes are so big that I think that every time it's written off, something happens, and then they'll actually sort of change the domestic policy, and if there's a obvious incentive to import coal because it's a lot cheaper, then they'll tweak the policies accordingly, and then you'll get a big impact. And I think if it gets too expensive and there's too much imported coal and the domestic coal producers then start to lose money, you'll see a rebalancing again. And they're playing an economic game there, but that ultimately will, I think, secure much longer tail of demand for coal, because the alternative is on the renewables, where we know they're going great guns, but the two actually need each other.
And Tim, give us your perspective on coal, and let's bring India and economics into the equation.
Well, global energy demand keeps growing. Of course it does. And I was looking a few years ago, so these numbers are a bit out of date, but at energy consumption per capita in different regions of the world. And I found it very interesting, so I'm going to share it with you. So US energy, electricity consumption, 13,000 roughly kilowatt hours per head per year. Europe, something like 5,000 at that time. China was roughly 4,000. Steve would probably give me a different figure. But the most interesting figure of all was India, which, bear in mind, has a population, 1.2 billion. Their electricity consumption per capita at that time was 850 kilowatt hours per head per year. And it is unimaginable that situation of energy poverty would be maintained. So the big question, I think one of the biggest questions for the global energy market and for emissions as well, is how will India generate 5,000 kilowatt hours per capita of electricity for its population? Where will it come from? And the latest numbers show that there is growth in renewables, there is growth in hydro, but coal is still growing. And the point about energy security, national energy security, is also a key one. And you can see that India is I think now, that's still making a different story. Anyway, main point is energy demand in India will keep growing, and coal will be a big part of how that is met. That's our view.
All right, let's go to another place on the planet. Let's talk about Venezuela for a minute. Let's talk about it from the point of view of the legal perspective, and then we'll talk about it in terms of what it means for energy.
Yeah, when it comes to Venezuela, I feel like a true lawyer dampening the mood, because you watch the news and you think you're watching a scene out of an action thriller, or you're reading the headlines, and it feels like you're reading out of a novel. But it's very exciting, it's very dramatic. But from a legal perspective, not much has changed, because Venezuela remains comprehensively sanctioned. So if you want to conduct business with Venezuela, which 90% of the time it will be oil business, then it's still illegal to do so unless you have an exemption. So for now, Venezuela remains a no-go area from a legal and a regulatory perspective. Whether this changes, to be seen, but for it to change, there needs to be a political motivation, not a legal effect to it.
Yeah, so Venezuela, I think that kind of set the tone for the year, a sharp reminder of geopolitics and the impact on shipping. And it basically started at the end of 25, right? When you had the US starting to enforce and doing kind of this enforcement in practice more so than on the books. And I think that also bridges from the discussion on sanctions, that we now actually are blocking these vessels from coming out, then we will stop these volumes that we have been struggling with before. And it's much more about an enforcement situation than production. Yes, in the long term, there is a lot of potential out of this region to bring barrels to the market. But the interesting part here is that for shipping, it's all positive. Because this is a dark fleet handling all these volumes, most of which went to China, also switching away from the US to China. So now there is a total upside for the mainstream shipping fleet. And I think also this, the construct that we see now with the US taking action, that's kind of call it a commerce rating that we might see more of, rivals taking, attacks, making attacks on the other parties' trade flows. But Venezuela, if China wants more product, they need to find it elsewhere. So there's going to be a long haul, ton mileage, on a mainstream fleet. At the same time also, the US has said they will take a lot of crude up to the States. They need that for their refineries, also on mainstream fleet. And then also thinking about the potential going further out, maybe a 3 million per day production in 2040. You can see that we also need...
In 2040.
Yeah. And you can achieve 2 million barrels per day in 2030, 32.
And currently, where are we?
Around 1 million. So it's a way to go, a lot of capital to be introduced, and that's also part of this plan, I believe. But then also increasing production. These are heavy grades. You need also diluent like naphtha, condensate to be brought into Venezuela, also on a mainstream fleet. So again, whichever way you look at it, there's a huge upside for the mainstream fleet when you disrupt, call it dark or shadow cargoes, right?
All right, we're going to talk about tariffs for a couple minutes now, and if we had done this panel yesterday, we would have talked about tariffs earlier in this conversation, but according to the FT this morning, we don't need to worry about additional tariffs anymore, but the FT on Wednesday morning was tariffs are back again. So let's start, first of all, from a legal perspective and your perspective on that.
Tariffs are interesting because there is an announcement, which is typically a political announcement, but that's normally 1 or 2 lines long. And then, of course, as a lawyer, you're thinking, how do I interpret that for the benefit of my clients and my business partners? And then you see how this develops, if it develops, or actually if there's exemptions to that as well. I think the impact that we've seen on tariffs, at least for the most part of last year, is that because we are unable to advise with certainty, because there is no certainty, then people don't move. You don't know what ships you want to buy. You don't know what ships you want to sell. You don't know what ships you want to charter or finance or lease or whatever. So you end up doing nothing, waiting and seeing. And I think that's rather than any strict legal interpretation of that, I think the side effect is that the legal regulatory uncertainty creates perhaps commercial uncertainty and a standstill. But it'd be interesting to hear from the rest of the panelists.
Oddmund?
Yeah, so I just want to jump on that. And we've seen how flows that never go away, they just rerouted, right? There's always a way. Diversification is one. But I want to talk about this regionalization part. I think that's become more interesting now and relevant in this kind of tripolar focus that we had in the past 12 months, rapidly coming up. And we used to talk about near-shoring, friend-shoring as a political kind of concept, but now we talk about risk management. And also looking towards into 2026 and the impacts for shipping, now maybe we need to deal with this as a permanent factor, not waiting for the tariffs to go away. Maybe there will be changes in structure, and once we start to plan with that, we make investments in the whole value chain, logistics, ports, production refineries, that will permanently change these trade flows. So that's something to watch out for, I believe.
And William, you have
Yeah,
a
I think
plan.
one of the impacts of tariffs is it's made the traditional seasonality much more difficult to rely on from a trading perspective. And if I roll in, slightly fudging it, the USTR port fees sort of drama, if you want to put it like that, or mini drama as it turned out to be, into the whole tariff thing, that's still being felt, the impacts of that are still being felt now, because China recently announced that they had bought the 12 million tons of soybean that was part of the settlement deal when they sat round and, the US had port fees for Chinese vessels, and then the Chinese reacted with even bigger port fees for US-owned vessels. And we all know that the sort of market, the market ruction that caused over that sort of relatively short period in time as we look back. But at the time, it felt a very sort of seminal moment. And that's still leading to unusual trades that aren't necessarily economically that rational, but the Chinese said they'd committed to buy by the end of the year. It turned out they meant the end of the growing year. And so you've got a lot of soybeans going into China now, even though there's a negative cross margin. I mean, they wouldn't normally be doing that. And so then that's kind of disrupted the normal seasonality. It's inefficiency. It just creates another layer of confusion. But I don't think you can say that they're going away, because they have, implied and secondary effects by people worrying about what might happen rather than actually exactly what has happened.
My last question for everybody. What are we worried about today that we should not be worried about? And what aren't we worried about today that we should be? So I'll start with Tim.
Well, I'd like to take up a point you made, which is that trade finds a way. And I think we probably worry more than we should about trade growth, because actually even in this slightly mad-feeling time, trade keeps growing. So that is something I don't think we should worry about. And things that we should worry about, I think one thing that I never hear anybody talking about, and that may be because they're talking about it privately, is what happens if China decides it's going to take Taiwan. And if that happens in 2027, what do we all do?
I think if you just zoom right out and you say, where does China get its oil? It's Iran, Russia, Saudi and Venezuela. And look at what the US is doing over the last few months. Iran, there was plenty Trump had to say about that. Venezuela, we've discussed it. Russia, well, we haven't even discussed the fact that he threatened 500% tariffs on anyone who imports Russian oil. Hello, India. Are they worried about that? I mean, whether it comes or not, who knows? But the point is, what does that tell you about the perceived risk by the US of China? And that's where they're getting their energy from. We've heard this term, sort of our hemisphere, from the current US presidential team around, the Americas, South America as well. This is a, source of a lot of natural resources. And so this is a trend that's not going away. I mean, this bipolarism, we've seen it very eloquently presented in the first presentation of the morning, that this is going to keep happening, and this is going to create, an enormous amount of disruption and inefficiency. And that's actually tends to be quite good for shipping, until all of a sudden it's not, because you actually get something that oversteps the mark, like a war, a conflict. And dare I say it, 2 or 3 days ago, we may have been talking about the potential for conflict between a NATO-US kind of alliance, where does that mean every charter party that's in place can get cancelled under the war clause? Are we heading inexorably to conflict, I think, is the scary question.
Yeah, so don't worry about oil price. Don't worry about trade going away. Don't worry about tariffs. But again, can we try and identify a permanent change to trade flows? And where that will happen? And also, can we identify any, could there be any sudden shocks when it comes to regulation? A bit kind of related to what you said about Taiwan, but what are those kind of gray or orange swans out there? And also the last is, if I think of one more. What if the world goes back to normal? What happens then?
That's my biggest fear. And Trump's my smallest fear. Go ahead.
I wish you had told me about the oil price, not to worry about the oil price before I got an electric car, but that's... the answer to both questions is planning for and worrying about the sanctions of tomorrow on your sanctions knowledge today. And I think being able to plan for what the framework would look like for you to run your business based on today's regulation, based on today's laws, based on today's data, is both important to do, but also a near impossible task.
Gentlemen, thank you very much. And to the audience, thank you for your time.